Hey folks, Gary Dean here with Sentiment Timing. This is our technical video report for Sunday, March 14th, 2026. So the Bulls continue to have some issues. Me personally, with this whole Iran war going on, I personally think that Trump got led down the wrong road on this one, and I don't believe it's going to be as fast as they think. Yeah, it was a regime change and stuff like that, but it's still the same regime that's in there. It's never easy to do those. I think he was ill-advised on this one, and the markets are taking a hit for it. We have oil that's spiking up, and it may not stop. That's the biggest problem that I'm seeing right now. Even though I'm overall bullish on the market long term, short term, I'm not sure, because we're at our secondary accumulation zone, and if they lose that, then most likely we're going to see a move come down into the 650 level, and that would take us, hang on one second. Okay, so that will take us down to this support that's really, really important, and that's the 652.35 on the SPYs. Now, the one thing that's promising right now is you can see we're not really seeing that much selling going on. Typically, when you get these types of moves that on the downside, you're seeing liquidity go down with it. And right now, you can see right here, liquidity's actually been going up. You can tell by the aqua candles here. That means that they're buying these dips right here. So we don't have any liquidation buy signal yet, but that should be coming. But like I said, if the Bulls lose this, the 661.41 level, really you got to anticipate that we have another 90 plus points to the downside, down to the 652.35. And the positive thing also, this is a 4-hour chart. We're going to probably have full duration if it does come down to these levels here, and from there, that's where I believe we'll get another pump somewhere up into the 683, possibly higher. But like I said, I'm just really not convinced that this war in Iran is going to go as fast as they were anticipating. And if oil stays elevated or heads higher than where it is, the markets are going to take a hit on this. And I think, Trump's going to realize he made a major mistake on this one, going into Iran, because regime changes are never easy. And, there's a lot of consequences on this one. So that's it. If they can hold this, then again, we should bounce somewhere up into the 673, possibly even up at the 683. If they lose this, then again, we got to anticipate that we're coming down to the 652. Now, I believe that if we do come down, say, to these levels, let's say we do need a little more selling going on, and they come down to this support level right here, what I think is we're going to build some type of just consolidation level, meaning that we'll probably have some kind of rounded top that will break, where you can kind of see it perfectly right here, where where we just have this kind of rounded top formation. And it's not a bullish one, but it's not as, if it breaks through it, then obviously this pattern is null and void. But if they get held down, this is that rounded top, and we probably would have more room to go on the downside. And I don't believe that this is going to, like I said, we're probably going to be stuck in this range for some time now, and it's probably going to take us into probably the April-May time period, and that's really what we got to keep an eye on. And you have to, if we're going to trade long, we definitely could do it. We're going to follow our liquidation indicator here, and then look and see where the resistance is based off of our institutional distribution and accumulation zones. So you can see we have, again, nice bullish divergence on liquidity here as this market went down. If they hold it, obviously the Bulls are going to have to get above the 665 level. If they do, then we have this resistance at the 671, and then we have our primary distribution between the 674.50 and 677.32, with the secondary up at the 681. So I do believe we're going to pop up. It's just a matter of how the futures are going to open tomorrow, because, as I said, this war is going to take its toll on the markets, and I think we're going to have to just be prepared for that. So let's take a look at the 5-minute chart. Again, these dots mean that there's institutional buying going on. The purple means that they are actually selling, and I was anticipating that we were going to get a larger pop off of these lows here, and I didn't. I traded IWM very poorly, and it was my own fault. We had decent entries. I got definitely there was a good head fake that got me trapped in it, and but then from there I was just looking for a bigger move, and we were in a range, in a very shallow range, and if I would have just traded it, taken $1 or $1.50, we would have done fine. I was looking for the bigger move, and I really did not trade IWM well at all. So here you can see, here's our distribution. Primary is the 665.72 up to the 666.77, with the secondary at 668.30. So we don't really have full duration right now. We're just kind of stuck in the middle, but you can see we got some buy candles. As these, when you see the red candles, that means that it's just all out selling. This means that there is buying, and you can see it here. We saw buying, and then it turned green, and we saw the spiders just make it up to the top of this range right here at 664, and then came back down again. So it was definitely not a good day for the bulls overall, even though, they had a great start, a nice open, and then it was just all out selling, which you can see by the purple candles right here. We got up here, we got a buy signal, but that was really the first, say 15 minutes of trading, and we didn't have too much duration. And then we saw selling by these purple candles right here, and when it turned to red, and every time we had a bounce up, it was selling and selling, and this was finally where we saw buying coming in, but it wasn't enough to hold it up. But if you notice all the accumulation down here, these are these green and yellow dots right here. So there's people that were buying, and we only have a couple sell ones here. We had this one that was at was it 215 where we popped up, and then they sold it, and that was it. But like I said, I think we could get a bounce on Monday. It's a matter of how the market reacts to the geopolitical issues that we have. So let's take a look at IWM. Here you can see from this anchor to this anchor, we're hanging out in the primary right here. We've seen a bounce every time we've gotten there, but if they lose it, then we're probably coming down to the 238 level, which or say anywhere to 239.80 down to the 238.30 level. And if they lose that, then we're going to see a move come down to the 230. So we're in some critical times here for IWM and the spiders. Here, the good thing, we do have full duration to the upside. And you can see we have some nice bullish divergences, and you can tell by the aqua candles here that there's buying on this entire move down right now. So again, if they lose this, then we got to anticipate we're coming down to the 238 level. Now taking a look at the 15-minute chart, again, there's just a lot of accumulation. This is the one, this candle right here is the one that got me, where we had a dip down. And well, actually, it was this red one where we came up. We went right into our distribution primary, and it looked like we were going to take off and come and test these highs again, and we just reversed. So this was my first bad trade. And then from there, we were getting decent entries. It was just a matter of expecting the market to go higher. And every time we got up to this range right here, sellers stepped in, and that was it. And we really, the bulls are going to have to get it above the 247 level. If they do, then anticipate we're coming up to our primary distribution between the 249 and the 250, and then it'll move up to our secondary at the 251.22. You can see we do have some bullish divergences. We have liquidity that was moving higher, and that's about it. But let's take a look at the 5-minute chart. And again, this was really the candle that got me on this one here, because after this candle was made, we just saw selling. We did see buying. Again, these were good entries. I just was anticipating that we were coming higher, and we just stayed into this range. So again, it wasn't really this software's problem with IWM. It was my own trading, because I was really looking with all the accumulation that we saw, the institutional buying. I was waiting for a pop up to get somewhere up into to test these highs again, but obviously that didn't have it. And once we got up into the range, you can see here's your sell signal. We had a divergence on liquidity. Market went down. Here we had a divergence to the upside. up and down. And if we just would have traded this range, it would have been fine. But you can see we've the institutions are buying this. I just think a lot of it has to do with what's going to take place on Monday at the open. So where we basically are getting everything together with our landing pages, with our liquidity pressure indicator, as well as our liquidity divergence indicator. And it's once that's done, we're going to be putting that into a standalone software package, which is going to be the liquidity, the IPM liquidity software package, and that will include the liquidity as well as our divergences. And then we'll have our institutional pivot matrix sold separately. They're both going to be going for $2.99. You're going to be able to get them as a package for $4.99. So you're going to be able to save some money on it if you get them both. But really, like I said, we're seeing buying right here. There's a lot of buying at the close, but we have to see the bulls get above this the 247 to the 247.30 before we're going to anticipate a move up to the 249 level. So let's see what plays out tomorrow. Have a great rest of your weekend, and I will talk to you guys in the morning.